Hi, Professor. Good morning. Good morning, guys. Can you hear me?
Good morning, Professor. Yes.
All right. Okay, we're gonna start soon. So the class should be around 40 people, but we have 15 people. So some people might join late. And in that case, I appreciate someone let me know if someone is waiting in the lobby so that I can let them in, okay? So just let me know if someone in the lobby. So if as soon as I get to the full screen mode, so I can see who is waiting in the lobby. I would appreciate that. All right, so let me share my screen. Any question, guys, before we start? Any question? All right, I'm gonna share my screen.
Sorry, Prof. My grades are still not yet uploaded.
In Blackboard? Yeah, so don't worry about it. Don't worry about it. Just your grade's gonna be in red. So I will upload it soon, hopefully. So just for your reference, the Vreta is basically your latest grade are gonna be in Vreta. So and so just you can look at your grade on Vreta. So not in Blackboard yet. Okay. So any other question? All right, so I'm just gonna bring up my PowerPoint and we go from there. Okay, can you see the PowerPoint now?
Yes.
Yeah.
Sir.
All right, yes. Sounds good. All right. All right, today we're going to discuss payment terms and cash discounts. So basically, a cash discount is the amount of discount on the net price invoice amount that is offered by a seller to a buyer to encourage early payment of the invoices. Cash discounts are expressed as a percent of the net price and have a time limit, after which the full net price amount is due. Determining the time period in days between dates can also be calculated using the day table or financial calculator. Okay. So basically, what it says so. When you buy something from a seller, there are sometimes between two. This happens mostly between two corporations, two companies. So one company buys something from the other company, and the company which is selling this stuff basically send an invoice to the company which is buying, and ask for basically send an invoice to get paid, right? And in that invoice, sometimes seller give buyer an incentive, cash discount, basically, if the buyer pay within a certain time period, like 10 days, 15 days, something like that. Okay, and that also reflect in the invoice. So let's look at the invoice here. So this is one invoice, an example of invoice. So this is basically a very typical invoice. If you work for any company, this is basically a very typical invoice. It has invoice number, date, seller name, buyer name, basically the item description, the description of the item which is bought and sold, and also this one. Okay, so this one is not very usual. The cash discount and payment terms are not very usual. This is generally happen when the invoices are very big, like more than $100K, $100,000, $150,000. That's basically that generally you see these terms. Okay, and this is what we discussed today, basically in this lecture. So the payment terms. Okay, so what this payment term says after this invoice date. Okay, after this invoice date, if it's 7 days after invoice date, you pay. If you pay, they say to the buyer, if you pay within 7 days of the invoice date, you will get 3% discount. Okay, 3/7. Okay, and if you pay within 20 days of the invoice date, you will get 1% discount. Okay, and if you pay within 30 days of the invoice date, you have to pay the net price. Okay, and if you pay more than 30 days, there's going to be penalty, which doesn't mention here. So basically, you give buyer 30 days to pay, And if the buyer pay within 7 days, get 3% discount. If your buyer pay within 20 days, get 1% discount. If your buyer pay within 30 days, has to pay the whole price. Okay, and what I mean means so between 0 day, the invoice date, to 7 day, you get 33% discount. Okay, between 7 days and 20 days. Okay, if you miss the 7 days, but you pay after 7 days to 20 days, you get 1% discount. And if you pay after 20 days to 30 days, you have to pay the whole price, the whole amount. Okay, so that's how you read this this table. So 737 means 3% discount within 7 days, 1% discount within 20 days, N means net price within 30 days. Okay, that's how you read this payment term. Okay, let me see who is in the lobby. Yes, we got some people in the lobby. All right, any question here? All right, so yeah, so basically that's the invoice, typical invoice. Okay, so the date, in the invoice can be basically, so we call ordinary date. Ordinary date means that from invoice date you calculate, you do this all this calculation. Okay, that's ordinary date. Sometimes the seller give the buyer the option of end of the month. So say, okay, so I'm not so the seller tell to the buyer that, okay, I invoice you on 23rd of December, but you have from end of the month you can calculate these payment terms. Okay, so it give you 7 days grace period, and after 7 days grace period, you have end of the month, basically end of the month, end of December, and then you start to calculate these payment terms. Okay, can be either end of the month, ordinary date, which is invoice date, or can be the date is going to be end of the month that you calculate the payment term, or after you receive the good, called ROG. So EOM is end of the month, or ROG, which is receipt of the good. When you receive the goods, then you can basically from that date you can calculate that payment term. So that's also the whole thing will be mentioned in the invoice. So don't worry about it. So in the invoice mentioned whether it's EOM, ROG, or if there is no EOM or ROG in the invoice, means that the date is going to be invoice date. Okay. So yeah, so basically the ordinary dating. So this one is ordinary dating, which is because it doesn't say EOM or ROG at the end of it. Okay, if there is a EOM or ROG at the end of it, means that you have to calculate based on that. Okay, but right now this just invoice date is a reference date. So the reference date is invoice date, and you have to calculate the number of dates based on the reference date. Okay. Okay, so an example, for example, here is so ordinary dating basically like this. So you have to, okay, so how do you calculate that? Okay, so right now we have a payment term which is like that, 5/10 and over 30. Okay, so we wanna basically know and the invoice date is December 23rd. Okay, so we want to know basically which date are these dates. So 10 and 30. We want to know which date are they. Okay, so for that we basically make a timeline like this, and December 23rd, the invoice date is going to be like here. Okay, so this is ordinary dating, means invoice date is a reference date. Okay, so December 23rd is the first day, and then 10. So this day is day 0. Actually, December 23rd is day 0. So you have to add 10 to it. So add 10 days to December 23rd. It's going to be January 2nd. So how do you do that? So basically, if you're wondering 10 days plus December 23rd, which day is going to be, don't worry about it. You can use financial calculator. Let me go to financial calculator here and do that for you guys. So second date, okay, second date. So now December 23rd, 2023. Okay, so if it doesn't say there which year, you can just put 2023. Okay, if it says it's which year, which I think this invoice said 2019, you can use that invoice thing which I have said right here. So it's going to be December 23rd, 2019. So it's going to date one is going to be December 23rd, 19. Okay, enter. Okay, December 23rd, 19. And you want to know, you want to add 10 days to it, right? So so DBD is 10, enter. And now you go back to day 2, CPT. So it's going to be January 2nd, 2020. So January 2nd, okay? So it's going to be 10 days. And also you want to know what's going to be the 30 days, right? So 30 days is going to be, let's add 30 days to that, guys. So still day 1 is going to be December 23rd, 2019. Now you want to go to DVD, add 30 days, enter, and then go back to DT2 and CPT. So January 22, 2020. So January 22. Okay. So that's how you, if it's hard for you to add 10 days to December 23rd, you don't know whether December is 30 days or 31 day. So how do you add it, whatever? So you just use financial calculator. Okay. So you can use the financial calculator to know which day it's going to be, right? So in this case, it's going to be January 2nd. After you add 30 days, it's going to be January 22nd, okay? So basically, within the 10 days, which is basically within from December 23rd to January 2, December 23rd is the invoice date, right? So the invoice date, okay? To January 2, you get 5% discount for the invoice, and from January 2 to January 22, you basically you have to pay the net price, okay? So no discount, okay? So that's it. So all right, so if basically end of the month dating, so end of the month dating means basically your invoice date, it doesn't really matter anymore. Then you have to go to the end of the month, okay? So your reference point, your reference date point is going to be end of the month, okay? From the end of the month, and then you have to add 10 days and you have to add 30 days to find that the discount period, okay? So basically at the end of the month, which is February 28th, you basically calculate 10 days. It's going to be March 10. And from 28 to March 10, you get 5% discount based on this table. And from March 10 to March 30, this is very simple, right? So end of the month, 10 days you add to the February 28, it's going to March 10, and 30 days you're going to add, it's going to March 30. So this is going to be easy. So you don't need to use financial calculator, right? So because when it's the end of the month, it's going to be, the 10 is going to be March 10, 30 is going to be March 30. Okay, so it's going to be very easy. You can easily find it, unless it goes to 45. If you go 45, then you can use basically financial calculator. Okay, so basically, as I said, so it's from February 28 to March 10, you get 5% discount. From March 10 to March 30, you get no discounts between this. And I said when it says in the invoice is EOM. When it says in the invoice is EOM, the invoice says that doesn't matter anymore. You have to go end of the month. From the end of the month, you have to do this calculation. Okay. Let me just see.
Excuse me, Professor. Someone is waiting in the lobby.
Yes, I already noticed. All right. So any question? Oh, okay. So one more thing I want to add here is that if the buyer decided to pay the invoices before February 28th, like as soon as they receive the invoice, they decide to pay. The buyer decided to pay for this period from February 20, from invoice date to an end of the month, the 5% discount also applies. Okay. So basically, the 5% discount also applies to this period as well. So the period between invoice date to the end of the month. So that's one thing I want to mention to you guys. It's just because it's obvious, right? Because the seller say you can pay from end of the month, and you have 10 days to get 5% discount, right? But seller would be very happy to get the money even before end of the month, right? So that the 5% discount also applies from invoice date to the end of the month. So from February 20 to February 28, the 5% discount also applies. Okay. So this is one thing I want to mention. Okay. Any question? All right. So if the payment term is ROG, which ROG is mentioned, is going to be mentioned in the invoice. So in the invoice, you will have payment term, 5/10, N/30, and ROG. Okay. And ROG means receipt as good. Okay. For an invoice dated March 15 with goods receipt on March 23rd, and the following term terms of payment. This we can have, we can just make the timetable. Just make sure you guys make this timetable. This is basically timeline. Make the timeline. Make sure you put all the dates right on there. Okay, so March 15 is the invoice date, but the good is received on March 23rd. So the March 23rd is going to be your reference point of the date. Okay, from March 23rd, you have to add 10 days. Okay, 10 days. If you're wondering is how to add 10 days, whether it's going to be April 2nd or April 3rd or April 1st, just use the financial calculator. Okay, March 23rd. So let's use my financial calculator. And date 1 is going to be, so you know how to do that, right? Second day, okay, I'm just going to quit second date, right? You go to date, you have date 1, date 2, and number of days. Okay. So you can play with day 1. The date 1 is here, March 23rd. Okay, March is going to be 23, and let's say it's year 23. Okay, so 23rd of March, year 23. Okay, the date 1, and now number of days is 10, right? 10 for the first one, 10. Enter, and day 2 CPT, and day 2 is going to be Sunday, April 2nd, 2023. So April 2nd, and you want to add 30 days. So that's, you know this, and now you want to what is this. Okay, so I add 30 days, 30, enter, day 2 CPT. So April 22nd. Okay, so April 22nd is going to be the second one. So April 2nd, April 22nd. Okay, so now you put 5% discount from March 3rd to April 2nd, right? So the first discount period, 10 days, and then from April 2nd to April 22nd, you get no discount. One more thing I want to add: from your invoice date to ROG date, right? If the buyer decide to pay their invoice, they also get 5% discount. Okay, so from this date, basically March 15 to April 2nd. They get 5% discount. Okay, and the reason is obvious, because they haven't received the good, but they want to pay. So that's, seller will be very happy, right? Seller will be very happy to receive the money before even they receive the good. So the seller say, okay, after you receive the good, you have 10 days to pay for 5% discount. But if the buyer decide to pay before even receive the good, definitely seller would accept that and get the 5% discount. Okay, that's just obvious thing. Okay. Any question? All right, so let's go for an example here. Aaron purchased stationery for his business and received an invoice for $3,000 dated January 1st, 2020 with the following payments term: 5/10, 2/25, and 45. Okay, what amount is settled the invoice if paid on January 9? Okay, so let's make a timetable first. Okay, so this is basically ordinary date, right? There is no EOM or there is no ROG at the end, right? So it's just ordinary date. So the invoice date is going to be a reference date. So the reference date is January 1st. January 1st. Now you have to add 10 days. So it's simple, right? 10 days, 10 plus 1 is going to be 11, right? January 11. 25 plus 1 is going to be 26. That's right. But now 45 is hard. So I can do it myself. 45. I know January is a 31st day, and I add to this and then minus 31. I give you February. But the best thing I'm going to do is just 45 add to January 1st and see which day is going to be. Okay. So I'm going to use for 45. I'm going to use financial calculator. Okay. 45. January 1st, 2020, right? The first date is January 1st, January 1st, right? January 1, 0.01 20, right? So January 1st, 2020, okay? And now number of days is 45, right? 45 number of day. Now go to D2 and CPT. So it's going to be Saturday, February 15, 2020. So it's going to be February 15, okay? So now I made this table. Now the question is, what amount will settle the invoice if paid on January 9? Okay, so January 9 is between January 1 and January 11. So they get 5% discount. So 5% discount on $3,000. Okay, so it means $3,000 minus $3,000 multiplied by 0.05, or $3,000 1 minus 5%. Okay, net price is going to be list price 1 minus discounts, right? So discount in this case is 5%. Okay, so it's going to be $2,000 multiplied by 95%, right? So it's a 5% discount. It's going to be multiplied by 95%. It's going to be $2,850. Okay, that's going to be $2,850 is if it paid in January 9, pay on January 9. Okay, so basically you find it's $3,000, 5% discount of $3,000 is going to be 5% of $3,000, which is going to be, so the whole amount is going to be $3,000 multiplied by 95%. So $3,000 multiplied by 95% is $2,850. Okay. So what amount will settle the invoice if you pay on January 26? So January 26 is the last day of the discount period for 2%, right? For 2% discount period. Okay, so 2% here, like 2%. Okay, so the last day you can still enjoy the discount, and it's only be 2% discount. So you pay $3,000 minus $3,000 multiplied by 2%, or $3,000 multiplied by 98%, right? So $3,000 multiplied by 98%, which is going to be $2,940. Okay, so 2001 minus 0.0. Okay, so January 26. And the last question is, what amount will settle the invoice if paid on February 10? Okay, so February 10 is going to be here, right? So February 10 is going to be here. So between January 26 and February 15, so you have to pay the whole amount, right? So there is no discount and net price, so you have to pay the whole amount, $3,000. Okay, any question? All right, no questions. Good. So the first thing you have to do, guys, is just make this timeline. Okay, just make a straight line. You put the invoice date at the beginning, or the reference date, invoice date at the beginning, reference date at the beginning, and then you calculate the rest of the days. Okay, if it's complicated, so in this case it was not complicated. January 1st, you add 10, it's going to be January 11. You add 25, it's going to be January 26, right? So, but 45 was difficult, so I use financial calculator. Okay, if it's easy, just use it by hand. If it's difficult, use financial calculator. Okay. Hannah purchased some office equipment and received an invoice for $5,000 dated March 8, 2019, with the following payment term: 10/10, 5/25, and 45. What amount will settle the invoice if paid on March 18? Okay. So first of all, you need to make that timeline. Okay, March 8, 10 days plus March 8 is going to be March 18, right? The 25 days plus March 8 is going to be 33. So March 33. We don't have March 33, right? So you're going to use financial calculator. Okay, March 8, 2019. Okay, let me admit this. March 8, 2019. So date 1 is going to be 3, which is March. 8, which is date 08. Make sure you guys have 08 and 19. Okay, enter. So you know how to do it, right? The first is a month, right? Dot. You have to put dot there, guys. Okay, and now 8, you have to put 08. Okay, the date, and 19. Okay, enter. So it's going to be March 8, 2019. Okay, so that's March 8, 2019. So you want to add 25 days to it, right? So you go to DBD, add, make 25, set, and now you go date 2. Okay, date 1 we already set, date 2, and you put CPT. So it's going to be Tuesday, April 2nd, 2019. So it's going to be April 2nd, 2019. Okay. And now 45 days. For 45 days, you want to add to March 8. Again, your date 1 is going to be March 8, 2019. And DBD, number of days, is going to be 45. 45, set, and go to day 2, and you put CPT. It's going to be April 22nd. Okay. So that's going to be April 22nd, 2019. So that's how you basically make that timeline. After you make this date point, and then you put the discount on, between them, right? The first one is the 10% between second and the third is going to be 5%, right? So 5% is between second and date and third, and between the third and the fourth is no discount, so 0%. Okay. So 10%, 5%, and no discount. Now you go back to question. Question said, what amount will settle the invoice if paid on March 18? Okay, March 18 is the last days of 10% discount, right? March 18 is the last day of 10%. So make sure this belongs to 10%. This belongs to 5%, and this belongs to no discount. Okay. So March 18, last day of 10% discount. So you get 10% discount on $5,000. 10% on $5,000 is going to be $500. You deduct it from 5,000, it's going to be 4,500. Okay. Or you can just use the equation. The net price is this price 1 minus discount. Okay. You basically use the 10% discount. This price is 5,000, and you get after discount you will get 4,500. Okay. Either way is right, or you just do it by hand. 5,000 multiplied by 90%. 5,000 multiplied by 90%. Okay, 0.9. It's going to be 4,500. Other question, what amount will settle the invoice if paid on March 31st? March 31st is within March 18 and April 2nd, right? So it's going to be here, somewhere around here, right? And now you get 5% discount. So it's going to be $5,000 multiplied by 95%, right? 95%. $5,000 multiplied by 95%, which is going to be 47.50, okay? And last question, what amount will settle the invoice if paid on April 4th? So April 4th is going to be between April 2nd and April 22nd. So there is no discount. So you have to pay the whole amount. Okay, 5,000. Okay. Any question? Any question here, guys? Let's see. Any question here? All right, no question. Let's go for example. I give you a few minutes for this, guys, to you guys. An invoice dated November 22nd, 2020 for $1,000 has payment terms of 210 and 30 and EOM, guys. EOM means that the reference date now is not November 22nd, is end of November, which is November 31st or 30. I'm not sure. So that's one thing you have to figure out. What payment will settle the invoice if it's paid on 1 November 28, 2 December 6, and 3 December 11. Okay, I'll give you a few minutes for this, guys. All right, see what you guys done. All right, got the letter C. The letter C, okay. Yeah, C is right. Okay, C is right. All right, so okay, so what's the story here? Like 210 and 30 EOM, right? So the first day is November 22nd, right? November 22nd is your invoice date, right? So, but the invoice date is not important. Important one is basically the end of the month, right? End of the month is not November 30. How do you do that? How do you know whether November is 30 days or 31st day, 31 day? There's no problem, guys. You just go to Google. I'm just gonna Google for you calendar, right? And then Google Calendar. You go to Google Calendar and find November is 30 days. Okay, that's the best day of doing it. Just calendar, and then look at November, which is gonna be 30 days. So put 30 there. Put 30 there. Okay, that's how you do it. Okay, let's go back to the 30 days. Okay, so November is 30 days. Okay, so then 10. Okay, 10 is gonna be December 10. 30 is gonna be December 30. Okay, so this is very easy. So 10 is gonna be December 10, and 30 is gonna be December 30. So it's very easy. So because that's going to be the 0 date, and 10 days between the added to this is going to be December 10, and 30 is going to be December 30. So that's easy. Okay, so 10 and 30 is going to be December 10, and and December 30. So that's how that you make your timeline now. So now you put the discount there, 2% here, 2% here, and no discounts here. Why 2% here? Because as I said, from invoice date to end of the month, if the buyer decided to pay, definitely is going to get the discount, right? Definitely is going to get the discount. Okay, so if they pay even before end of the month, definitely going to get the first discount, the 2% discount. So now let's go to the question. Question said payment made on November 28th. November 28th is going to be here, right? So I still get the 2% discount. Okay, so we get 2% discount, $1,000 multiplied by 98%. It's going to be $980. Okay. And now December 6th, if they pay December 6th, right, which is between November 30 and December 10, we still get 2% discount, right? So it's going to be $980 again. And now if they pay on December 11, which is one day after December 10, they get basically no discount. Okay, 1,000. Okay. All right, an invoice. So another question, guys. An invoice dated June 22nd, 2020 for $2,000 has payment term of 5, 10, and 30 and ROG. Goods were received on July 6. What payment term will settle the invoice if it's paid on July 10 and July 17? Okay, you have 5 minutes for this as well. All right, see what you guys did. Oh, another A. Another A. Okay. Let's see whether A is right. Yes, A is right. Congratulations to you guys. All right. So, okay, how we do it? Let's again go back to the timetable, right? So make a basic timeline. Sorry, June 22nd is going to be your invoice date, okay? But you received the good on July 6th. So that's a July 6th. That's your reference date, right? And now you add 10 to July 6th is easy, July 16. You add 30 to July 6th. I don't know how to do it, so I have to use financial calculator. I don't know how to do it. So 30 days to July 6th. Let's do it here. So July 6, July is going to be 7, right? So 7.06, right? 7.06, and which year is that? 2020? 20. Enter. July 06, 2020. Okay. Now you want to add 30 days to it, right? So you go down here, 30 days, enter, and then you come here, the day 2, CPT, so it's going to August 5th, 2020. So August 5th, 2020 is going to be end of the credit period. Now you put discount there, right? 5% for this guy and no discount for this guy, right? So now you go back to question. Payment made on July 10. July 10 is between July 6 and July 16. So 5% discount here, right? 5% discount here. So the net price is going to be $2,000 multiplied by 95%, right? It's going to be 1,900, okay? And the other question, July 17, this is going to be between July 6 and 16 and August 5th, and no discount. So you get the $2,000. So it's $2,000 and $1,900, which you guys basically made it. Guess it correctly. Okay. All right. So what's a partial payment? A partial payment is a portion of the invoice amount. Okay, it's not the full invoice amount, but you pay. So partial payment is a portion of invoice amount. Like if the invoice is $5,000, you still want to pay within the discount period, but you don't have $5,000. You have only $2,000. Okay, so you pay the partial payments in the discount period. Okay, the partial payment is a portion of the invoice amount that a buyer pays within the discount period to take advantage of cash discount. If the full payment is made within the discount period, the amount credited is the invoice amount. Okay, if you pay the full $5,000, I mean $5,000 with the discount, then you pay the full amount, but the partial amount is you don't have the $5,000, but you want to pay whatever you have, which is $2,000. In this case, you pay $2,000. You take the advantage that you're using that you are in the discount period. Okay, you take the advantage that you are in discount period. You pay $2,000. Okay, and this $2,000 is going to be credited toward your $5,000. Okay, so since you are in the discount period, your $2,000 is going to be even more, right? Because you're in discount period. So your $2,000 is not going to be $2,000. It's going to be more than $2,000. Okay. So how much is going to be more? It's going to be basically the $2,000 divided by 1 minus D, divided by, for example, if it discounts 10%, divided by 90%, rather than multiply by 90%. Okay. So in this case, if you pay a certain amount in the discount period, the amount that you pay is going to be divided by 1 minus D, 1 minus this guy. That's going to be the amount credited, right? So that's going to be, for example, in this case, when the discount is 10%, when you pay $2,000 in the 10% discount period, you actually paid $2,222.22. Why? Because $2,000 divided by basically 90% is going to be 2,222.22. Okay, and that's the amount which is credited in the toward your total bill in that period. Okay, so your total bill now is going to be $5,000 after discount period. It's going to be 5,000 minus 2,222, which is going to be 2,778. So how do you do it? As I said, you pay to $2,000 divided by 90% is going to be 2,222, and now this 2,222 is going to be deducted from $5,000, and you have to pay the remainder of it in the no discount period, right? In no discount period, you pay 2,778, and you add with the $2,000 which you already paid, it's going to be 4,778.78. So that's what you pay in total. Okay. As I said, if you made any payment in the discount period, which is not the full payment, not the full discount period, which is not the full payment, that payment you divide by 1 minus D to find the whole amount, the amount which you credited, which is credited toward your total bill. Okay. Okay, so that's how you calculate the partial payment. Okay. Any question here? All right, let's do an example here. Caprice Industry bought furniture and received an invoice of $20,000 dated March 31st with terms and 20 divided by 10 and divided by 30. Okay. If they made a partial payment of $10,000 on April 10 and settled the balance on April 25th, calculate the total amount paid for the furniture. Okay. So in this case, basically March 31st date is end of the month basically. So 10 is going to be basically April 10, 30 is going to be April 30, right? So March 31st is the last day of the month. This is April 10, this is April 30, okay? And the payment paid in April 10. So you're going to use some, you're going to enjoy the discount period. You pay $10,000, the $10,000 is going to be credited, and then you calculate the rest, okay? So I give you a few minutes for this as well because I already explained it. I'll give you a few minutes, 5 minutes for this. All right, so let's see what's the answer is. A lot of A's here. All right, A is right. Okay, so let's see how can we do it. Okay, so as I said, this so invoice date is March 31st, end of the month, right? So we make the timeline first. So so 10 is going to be April 10, 30 is going to be April 30, right? So and then now the payment made on $10,000 made on April 10, right? April 10 is basically end of 20% discount period, right? So you get 20% on this, right? 20% from March 31st to April 10, and you get you have to pay no discount on end of credit period. Okay, so as I said, so 20% is discount period. You pay $10,000, right? You already paid $10,000, so $10,000 is going to be your payment in the discount period, which is credited toward your $20,000, right? So $10,000, since you made the $10,000 here, so the credited amount is going to be $10,000 divided by 0.8, right? $10,000 divided by 0.8, right? $10,000 divided by 1 minus D, which is 20%. So divided by 0.8, which is going to be 12,500. So that 12,500 is going to be credited toward 20,000. So how much left to pay? How much left to pay is going to be and settle the balance on April 25th. April 25th, you basically don't get any discount. So we have to pay the remainder on April 25th, and April 25th you have to pay remainder. So it's going to be you have to pay 7,500 on April 25th, which is basically no discount period. So how much in total you paid? You paid 7,500 on April 25th and paid $10,000 on April 10, right? So it's going to be 17,500. Okay. So that's total amount you pay. Okay. And the correct answer is going to be A. That most of you guys answered correctly. Okay. Okay. A software company purchased computers and received an invoice of $50,000 dated June 20. The terms 10, 10, 10, 520, and 30. If they made a partial payment of $20,000 on June 25th, another payment of $10,000 on July 7, and settle the balance on July 20, calculate the total amount paid. Okay, so this is like you have three payment term, and payments made payments made and you have three payments, right? One payment June 25th, which is I think in the first one. The second payment is done in the second one, and the third payment done in the third one. Okay, so and say calculate the total amount paid. Okay, I'll give you 5 minutes for this as well. All right, let us see here. All right, C is right. All right, so let's go for the solution. Okay, so first of all, we need to make the timeline, right? So the invoice dated June 20th, right? So 10, 10, 10, 10, 520, and 30, right? So 10, June 20, June 20, 10 days on top of June 20 is going to be June 30, right? So June 30 is easy, but 20 days at the June 20, we need to find out with the financial calculator. So date 1 is June, which is 6.20. Let's say 2023, like the year 23 this year. So June 20, 23, and DVD is 10. Sorry, 20. 10 already did 20. So 20 is DVD. Go day 2, CPT is Monday, July 10. So it's going to be July 10, and then 30 days on June 20. So 30 days, enter July 20. Okay, so July 20. So we made all those dates. So June 20, June 30, July 10, and July 20. And okay, so from June 20 to June 30, you have 10% discount. From June 30 to July 10, you have 5%, and July 10 to July 20, no discount. Okay, so now you look at the question. Okay, if they made a partial payment of $20,000 on June 25th, so June 25th is going to be sit right between here. Okay, so what's going to be the amount credited for this? So $20,000, 10% discount, the amount credited is going to be $20,000 divided by 0.9, which is going to be 22.22, right? So that's going to be amount credited, okay, toward the $50,000, okay? And another payment of $10,000 on July 7. July 7 is going to be between June 30 and July 10. So that's going to be $10,000 paid here. So amount credit is going to be $10,000 divided by 0.95, okay? So it's going to be 10,526, 0.32. So that's two amount credit, okay? And settle the balance on July 20. So the settle balance at the end of the credit period. So no discount, okay? So it's going to be, so $50,000 minus this, minus that, it's going to be $17,000. That's that they're going to settle this balance at July 20, right? So that's what they're going to settle. So what's going to be total payment? Total payment is going to be 17,000 plus 20,000 plus 10,000. So it's going to be 47,251.46. Okay, so that's what the correct answer is. This that most of you guys basically answered correctly. So, any question, guys? Any question? Any question before we dismiss the class and then we convene at in 15 minutes? No question? All right, so we're gonna dismiss the class and we come back at 11:15 for the second part of the lecture. Okay, so see you guys in 15 minutes. Okay, 11:15. All right. All right, welcome back, guys. You see the PowerPoint? Yes, no?
Yes, yes, Professor. Yes.
All right. All right. Any questions so far before we start the next part of the lecture? Any question? All right, no question. I'm just gonna bring it up. All right. So in this course, we're gonna discuss markup. So what is markup? Okay. So markup is the amount that a business adds to the cost of the product to arrive at the selling price of the product. Okay. So for example, this loaf of bread costs 20 cents to make. Okay. So what the cost to make is just cost of the raw material, right? So generally the cost is just the cost of raw material. When they say the cost to make something is just cost of raw material or the cost of basically acquiring that thing. Okay, for example, a cell phone cost for a shop means the cost that the shop basically acquired that cell phone. Okay, so basically the cost is just the cost of raw materials and the stuff, and the markup basically is the amount you add to that cost to come to a selling price. Okay, so in this case, for the loaf of bread, the markup is very high. It's much higher than the cost of making bread. Why? Because you have to pay for retail, retailer. You have to pay rent. You have to pay for the staff. You have to pay for accountant. You have to pay for this. You have to pay for that. That's why the cost for markup cost is much higher than the cost of making that bread. Okay, because otherwise you're running out of business, right? So this is all important. These are all important business factors that basically come to you into account when you put the markup there. Okay, to find to a selling price. So that's how basically markup is calculated. So markup plus the cost is give you the selling price. Okay, and markup itself is basically so. For example, so some other example of markup basically. So for example, for this loaf of bread, the markup is very significant, right? So is comparing the markup to the cost, is markup is like 14 times of the cost. Okay, so but for the case of car, markup is not that significant comparing to the cost of making it. Okay, so cost of making a car for manufacturer is pretty high. So and then the markup is not that high. So because the cost of labors and shipping and all those things is not significant comparing to cost of making it. Okay, so sometimes markup can be significant comparing to the cost. Sometimes can be insignificant to comparing to the cost. It just depends on which product you're basically making it and you're selling it. Okay, so basically in this case, in the case of basically the bread, the markup is 2.8, which is much lower than $5,000 like for the car, but a greater proportion of the cost and selling price. So the markup proportion to the cost is like 14 times, and markup proportion to selling price is 90%. Okay, 90% of the selling price is markup. But for the case of car, markup is basically comparing to cost is 1/5, 20% of the cost, right? The markup divided by cost is like 20%, 1/5. And markup compared to selling price is 1/6, which is like 16%. Okay, so basically it depends on which kind of product you're looking at, and then what's going to be the markup for that. Okay. Okay, so markup itself. So what's markup consist of? Markup consists of the overhead expenses and profit. Okay, so what is overhead expenses? As I said, overhead expenses for bread is going to be basically the rent, the staff, the accountant, all those things that if you open a bread store. Okay, if you open a bread store, bread might not cost too much, right? To make, right? But you have a lot of overhead expenses, right? So as I said, this is rent, staff, staff salary, accountant, all the things associated with running a business. So that give you overhead expenses. So that's overhead expenses. And on top of that, you need to have a profit, okay? You can't run a business without profit, okay? Has to have a profit. You have to have some money. Always a business has to make you some money, okay? After you deduct all those expenses, you need to have a profit, okay? So that's basically the markup. The markup consists of overhead expenses and the profit. So expenses plus profit is going to give you the markup, okay? So that's how it consists. So selling price is going to be basically consist of so markup is going to be expenses, overhead expenses plus profit, and selling price is going to be cost plus overhead expenses plus profit. So that's how basically the thing structured basically. Okay. So the amount of also markup can be expressed as a percent, known as the rate of markup, calculated as a ratio on cost or selling price. So rate of markup on cost. So rate of markup on cost, you divide markup by cost to the cost, and then multiply by 100%. For this case, for the case of bread, 2.8 divided by 0.2 is going to be 14 multiplied by 100. So you have 1400%, 1400%. Markup to the cost is 1,400% for this case, for the case of bread. For the case of car, markup to cost is going to be 5,000 divided by 25,000. It's going to be 20. It's going to be 20%. So this is 20%, but this is 1,400% for this case. And the rate of markup to sale, you divide markup divided by selling price, markup price by selling price, and multiply by 100. For this case, 2.8 divided by 3 is going to be 90%. So it's going to be 90%. Is 90% for the bread, and 5,000 divided by 30 is going to be 16.70%, 16.66% for the car. Okay, so markup divided by sell. Okay, markup price divided by sell. So it's going to be 5,000 divided by 30,000 for the case of car. The 1/6 is going to be around 16.66% for the car. Okay. So that's how you calculate rate of markup on cost and rate of markup on sale. Okay. You can also make the merchandising calculation table, which look like this. So you put profit, expenses, markup, cost, and selling price, and you put the amount here, and also you can put the rate there too, right? So rate on C, rate on S. So you can rate P rate on C, P rate on S, P rate on C, E rate on C. So P rate on C, you can divide P by C and put it there, and P on S. So divide P by S and put rate on there. Okay, on the percentage wise. Okay, and you can do for E, you can do for M, you can do for C, and if you can do for S. So for C and S, you don't need to do that, but for the rest, you can do that. So for C, you only find. So C rate on C is going to be 100%, right? So C on S, you can calculate it. So S on C is going to be more, and S on S is going to be 100%. So that's you can make this table as well, if you wish, and to basically have those information as well. But the most important thing you want to remember, the markup is going to be a profit plus expenses, and selling price is going to be markup plus cost. Okay, that's one thing you wanna remember. Okay. Okay, so let's solve an example here. A store purchased laptop for $1,200 each. The overhead expenses on each laptop are $250. The store wants to sell each laptop for an operating profit of $400. Calculate the amount of markup. Okay, so markup, as I said, is going to be overhead expenses plus profit. So it's going to be 250 plus 400. So it's going to be basically 650, right? So you can also make this table, as I said. So it's 400 is a profit, expense is 250, so markup is going to be 650. The cost is 1200, right? So why the cost is 1200? Because a store already purchased that laptop. So a store purchased a laptop, so it costs for it for the laptop is 1200, and now I want to sell it. Now we want to sell it. So you had overhead cost, which means the staff, the rent, the accounting, anything, right? So all those stuff are coming to overhead expenses for to sell that laptop, right? And also we want to make some profit on top of it. Okay, that profit is very, very important, guys. I ran a business myself, and I didn't calculate the profit, and I didn't put profit. I was just very happy to get that contract, and I didn't put the profit on the contract, and unfortunately the business went down because I didn't put any profit. I was just break even. I just calculated the cost and also calculated the overhead expenses, and I didn't calculate the profit. So it's very, very important. This is extremely important to have profit to anything you do. Okay, any business has to have a profit. Okay, so yeah, as I said, it's just yeah. So markup is going to be expense plus profit, as we said, is going to be 650, and now the cost is going to be 1200, right? Because the cost of purchasing that laptop is 1200, so the cost is 1200 now. So selling price. What's going to be the selling price? The selling price is going to be cost plus markup, so it's going to be 1850, right? So cost plus markup, 1850. And calculate the rate of markup and cost. The rate of markup and cost. Markup is going to be 650 divided by cost, which is 1200, right? So it's going to be 54.17. And calculate the markup on sale. So markup divided by sale price, which is 1850, right? Sale price, we find it here, right? So sale price, 1850, right? So markup on sale, 650 divided by 1850 is going to be 35.14, okay? That's how we calculate this, okay? All right, this is an example. I'll give you guys a few minutes to do it. A store purchased TVs for 1500 each. The overhead expenses on TVs are $100. The store wants to sell each TV for an operating profit of $300. Calculate the amount of markup, selling price, rate of markup on cost, rate of markup on selling price. Okay, I'll give you a few minutes for this. All right, so we got a lot of A here. Yeah, A is right. All right, so the overhead expense is $100. The store wants to sell each TV for $300, right? So expenses plus profit is going to be 400, right? So it's going to be basically, and the markup is going to be 400. Selling price is going to be markup plus cost. Cost is 1,500 plus markup is going to be 400. It's going to be 1,900. And now markup on the cost, markup is going to be 400 divided by cost, 1,500. It's going to be 26.67. Markup on selling price is going to be 400 divided by 1,900 by 100, which is going to be 2105. Okay. Yeah, you're right. So let's do another example here. A wholesaler purchased a product for $5,000 and has a rate of markup of 20% on the cost. So the cost is 5,000 and you have a markup of 20% of the cost. Okay. His overhead expenses are 10% of the cost. Find the amount of markup, selling price, profit, and rate of markup on selling price. Okay, I'll give you a few minutes for this as well, guys. All right, you got a lot of D. All right, see, yeah, D is right. All right, so $5,000 is going to be the cost of the product, right? The markup is 20% of the cost. So 20% of $5,000 is going to be 20% of $5,000 is going to be $1,000. So $1,000 is going to be markup, right? So if you make that table, so markup is $1,000. Overhead expenses are 10% of the cost. So expenses, 10% of the cost. So 10% of the $5,000 is going to be $500, right? So 500. Okay, let's just follow the PowerPoint. Okay, so selling price. Selling price is going to be markup plus cost. So cost plus markup is going to be selling price. It's going to be $6,000, right? Now the operating profit is calculate the operating profit. So the overhead is 10% of the cost, right? So 10% of $5,000 is going to be $500. This is going to be overhead. So the profit is going to be markup minus expenses, right? So markup is going to be expenses plus profit. So markup, so profit basically is going to be markup minus expenses. So the profit is going to be 500, right? So that's how you calculate the profit. Calculate the rate of markup on selling price. Markup divided by selling price multiplied by 100. Markup divided by selling price multiplied by 100. So it's going to be 16.67%. That's going to be rate of markup on selling price. Okay. Any question here, guys, before we go to the next one? It's pretty simple though, right? So it's just very simple concept to digest, basically. All right. So break-even price. So break-even price is the price without any profit. Okay, the same price that I used to calculate in my business. I did a lot of break-even price, so I didn't put any profit on my price. That's why the business went down, because I didn't put any profit. So break-even price is the price of basically cost and overhead expenses, and without any profit. So that's we call it break-even price. Okay. Basically the cost and overhead expenses give you a break-even price. Break-even price is cost plus expenses. Okay. So let's do another example here. A store received two trade discount of 15% and 10% on the list price of $2,000 for an item and plan to sell it for $2,500, so that their operating profit would be 20% of their cost. If they were unable to sell it for this amount, what minimum selling price would allow them to break even? Okay, I'll give you 5 minutes for this. This is a more complicated question than the other questions, but you guys, I'm sure you guys can do it. So basically, I just want to explain this. Okay, so the list price is $2,000. Okay, but the store received with two trade discounts of 15 and 10. Okay, so it means that the store received this item at the net price. So you have the list price, you have two trade discount, you can find the net price, and that's going to be the cost for the store to receive that. Okay, so there's going to be cost, item cost. But if the store selling it for 2,500, you're going to get operating profit of 20% of the cost. Okay, now which price they have to sell so that they don't have any profit. Okay, which price they have to sell that they don't have any profit. If they sell it for 2,500, you get that profit. So which price they have to sell that they don't have any profit. Okay, I'll give you 5 minutes for this. All right. Oh, good. Good. Quite a few people answered basically. C is right. All right. That's great, guys. All right. So as we said here, we need to find first what's the cost. Okay. So the cost, you got two trade discounts, right? So two trade discounts, 10% and 15%. So the cost is basically list price multiplied by two trade discounts, right? You learned it last week, right? You learned last week how to calculate the trade discounts, right? So list price, two trade discount, then it's going to be net price. Net price is 1530. That's going to be the cost, right? That's the cost. And now for this cost, if they sell it with 2500, they get 20% profit. Okay, so 20% profit if they have this cost. Okay, 20%. Sorry, I'm sorry. So if they sell it, if they sell it for 2500 for this cost, they get 20%. The operating profit is going to be 20% of the cost. Okay, so 20% of this cost is going to be profit if they sell it for this amount, 2500. Okay, now we want to say how much they want to sell it so that they don't get any profit. So what we have to do, basically, you find 20% of the cost and deduct it from that 2500, right? 20% of the cost, which is going to be basically 0.2 of the cost, 306. That and then you have to deduct it from 2500 so that you don't have any profit, right? So if they sell it for 2500, the profit is going to be this. So if for how much they have to sell it so that they don't have any profit means they have to sell it at 2500 minus 306, right? So if they sell it with 2500 minus 306, they don't have any profit, because if they sell it with 2500, they get this amount of profit. Okay, so basically, oh my God, that's really hard way of solving it. So you can make the whole table, right? And we can make the whole table with this. So we have basically selling price, you have the cost, then you can find the markup. Markup is going to be basically cost plus selling price minus cost. So selling price minus cost is going to give you markup. And then after you find the markup, you have the profit. Markup minus profit is going to give you the expenses. Okay, so and basically the break even price is going to be cost plus expenses. Okay, no markup because the markup is already included profit, so it's cost plus expenses, which is going to be 21.94. Okay, that's one way of doing it. The other way of doing it is just say, okay, for 2500 I have 306 profit. For how much? I shouldn't have any profit, so it's going to be 2500 minus 306, which is going to be the same price. Okay, so it's going to be the same price, 21.94. Okay. All right, one more question here. A bakery has a markup of 250% of the cost of their bread. They sell each loaf for $2.8. Calculate the cost of each loaf. Calculate the amount of markup on each loaf. Okay, I'll give you a few minutes for this as well. Okay. Got 2A here. A is right. All right. So how do you do it? So basically, you have markup is a 2.5 times the cost, right? And selling price is this. Okay. So basically, markup is 2.5C, and selling price is cost plus markup, right? So cost plus 2.5C is going to be 3.5C is going to be the cost, right? So it's going to be basically selling price. So cost is going to be 2.8 divided by 3.5, right? So, and then you find the cost. After you find the cost, then you can find markup. Markup is going to be 2.5 times of this, right? So it's going to be $2, okay? So you have the cost, you have the markup. Basically, that's it. So cost is 0.8 and markup is going to $2, okay? Any question? Any question on this example? This example was a little bit more, not more complicated. You have to basically make that equation for selling equal to cost plus markup, and you have the markup, which is going to be 2.5 times, right? 250% of the cost, right? Two is going to be 2.5 times cost. So markup is 2.5 times cost, and then the selling price is going to be cost plus markup, so cost plus 2.5 times cost. So 3.5 times cost is going to be $2.8, right? So the sell $2.8. $2.8 is going to be 3.5 times of cost. So cost is going to be $2.8 divided by 3.5, which is 0.8. So the cost is going to be 0.8. And now they ask, what's the markup? What's the amount of markup? The amount of markup to 250% of the cost, right? So 2.5 times of cost. You already have the cost, 0.8. You put it there, and then you calculate that. It's going to be 2, okay? And the correct answer is going to be A. So point A and 2 as the markup. Yeah. Here we have A and C the same, right? A and C are the same answer. So that's a mistake in PowerPoint. So it has to be fixed. So if you answer A or answer C, you're right. So any question, guys? Any question? This is the last slide for today's lecture. So any question? All right, let me just go back to I think for your test, let me see lessons and labs. Okay, lesson 8. Okay, so you can do lesson 8, right? Oh no, lesson 8 you already. Lesson 8 was for yeah. So lesson and lab 8 was for last week lesson. So I encourage you guys do it before it get too late, right? So that was for last week lesson. So lesson 9 is going to be for this week, but there is also markdown. So yeah, we haven't teach this yet. So markdown, we haven't teach the markdown. So don't do lesson and lab 9 before you learn the markdown. So, but you can do lab 8 and lesson 8. Okay, so do it before it expired, right? Expired, guys. It's going to be expired in 2 days, right? April 2nd. Okay, but lab 9 wait for next week so that we get the markdown, which we learn the markdown. Okay. Any question, guys? Any question before we dismiss? All right, so no question means we can dismiss the class. So, all right, guys, have a good weekend and stay safe, okay? All right,
Thank you,
guys.
sir. Have a good weekend.
sir.
Yeah, you too, guys. All right, bye.
Thank you, Professor.
Have a nice weekend. Bye.
Bye.